Yeah. No.
Babe, you're green. Hard. What is your meeting about?
I don't know if I'm muted.
Hello, guys. How are you? You're not unmuted, guys. I like to leave the classes unmuted so I can see how the people, if they have any questions, be a little bit more interactive, as I do with the with our trades on VC. I like people to mute themselves. If I still listen on the sides that you're distracted or noisy or anything, I will mute you. But the idea is to be able um, to participate, and I don't like to talk to the screen by myself. I'm just gonna wait a little more for a little more people to join, and we're gonna start. But for everyone who is here, thank you very much for sharing your time at night. The idea of this lesson is, of this lecture, is just to show you and share with you one other way that we can use to find and get your option contracts. There's so many different styles and ways. People will use the Greeks, people will use only certain EMAs indicators. This is just another way on how to do it. And the idea of this is to just to know how you can how we can use them, and give you a little insight, like, you know. Let's wait just, all right, we're 25. That's a good enough for me. What's up, Nando? What's up, Lotto? Thank you for the time sharing with me here. I'm gonna start, guys, with just a little basic information on the open interest and volume, and from there, I'm gonna take you to look for some samples. But we need to know and understand what is open interest and what's volume, and how I use them. That's one of the ways on how I use them to choose my contracts. Okay, so let's hit it. This is just I'm gonna give you some boring old definitions, but one of the key things on trading is to understand what are we doing. So trading volume, trading volume is just easy. Trading volume refers to the number of option contracts that are trading during a single day trading. So when we go to the
Oh,
chain,
look,
to the
here,
option
start
chain,
sleep on one of these. I just got these today.
I'm muting Quita. I'm muting you. Sorry. The mics are open. Yeah, I'm watching your face. No problem. If you need to ask, you're okay. But everyone else, remember, your microphones are on mute. I like to have interaction like we have on VC, but if you are making noise, cooking or whatever, please mute yourselves and cook with peace, listening to the lecture. So guys, volume, trading volume. Every time that we jump into the option chain, we have different information, and we'll go there. But the information that I like to have, the simpler one, it's trade volume and open interest. The volume, you need to know that it's how many option contracts are traded during a single day trade, and it will reset daily. So it doesn't matter if it's a buy or a sell, that contributes to the trading volume count. We use it as a metric of the activity of liquidity of an option market for a particular name. That's it. So when we see and we look for a certain contract to enter, I like to use the volume as to know how liquid, how many people is in there. If I need to get out of that contract, how fast am I gonna be able to, get rid of it? And we'll see some samples of different like names where the volume is really, really low. And if you want to get rid of it, it's really difficult. But compared with the open interest, the open interest represents the total number of outstanding contracts that have not been closed or exercised. So the key of the whole lecture is this. Now you know that the volume is the number of contracts traded during a single day. And the open interest, every time that you want to see it on the options chain, is just a reflection of the open contracts that are on the active in the market right now. So I'm gonna go a little more. How do we use it? How we use the volume as a liquidity indicator. So one of the easy part of using the volume is we will know if the option contract is more liquid or not. We will use it as an investor, as a traders, we'll know in which one we want to jump and how fast it is. Also, we can use it as a market sentiment. How do we use it as a market sentiment? We can use the daily volume to provide what is if the volume is decreasing of that certain contract on that certain name, or if it's increasing. So we will know that there is more interest to jump into this contract, or it's fading away. Do I want to jump in something that it's fading away? Maybe not. Do I want to jump in a contract that it has one, or I don't know. Imagine that I want to buy 10 contracts and the liquidity is 40 contracts. Do I want to jump into there? No, we don't jump into those. Unless you're an investor waiting for 10 years on something that it's going to grow and et cetera, et cetera. But as a option traders, day traders, scalpers, we look for the most amount of volatility and volume and open interest. So how do we know that the volatility measurement? Same thing. We just know that we got to be careful for if there are any events. Like right now we have a attack on Israel. Is that going to affect if I'm investing in oil right now and I have some leaps in XOM, or we have leaps in, I don't know, Chevron? Oh, let me see how the volume is working. If the volume, it's moving up, it's moving down. That's a confirmation of a change of a trend. Like if we see the volume jumping in, a lot of people now believe that the price of oil is going to go up, and it will help you make a more educated decision. How do we use for historical comparison? Well, we can always jump back to different times, and we can provide a context. So how we can on the chart we can see and try to make an interpretation of in different curves and different situations and different gaps and different wars, how the volume moved for those specific moves and try to relate with our current situation. And for the institutional activity, it's only like, we also see a jump on when we have like big, like the whales, as we call them, like, the big guys really getting to any specific name. Like when we see Berkshire Hathaway buying millions of Apple or millions in Walmart, you will see how the volume just pop up and everyone is just FOMOing into those contracts, trying to jump after he already did the move. So he's benefiting, his contracts are benefiting, and the shares of that FOMO that's happening after the fact that he bought into a specific contract. So just want to make sure that everything is easy until here. Everyone okay?
Oh shit.
Hey, can we make sure we're muting ourselves?
If I can, you want me to mute everyone?
Yeah,
Guys,
there's a lot of
everyone is on
crosstalk.
mute. We have 40 people here. That's an awesome. Everyone is on mute. I'll be muting.
My greasy ass thing.
I'll be muting people here, so no worries. So as a summary, the high volume, it's always a significant price movement. We have indicating strong participation from traders and a potentially confirming the strength of a trend. Easy. Hope that everything and everyone is just, easy on these parts. Like we're just cruising into this. How do we use the open interest? Same thing, guys. How do we use it as a liquidity indicator? Open interest, the higher the open interest, the higher level of liquidity for the option contract. The lower the open interest, same thing. The lower, that's why we use them together. Open interest and volume. How do we use open interest to feel the market sentiment? Well, we can also use it as a suggestion of the current trend. We can use it as how the market is. Remember that we're trying to look for breakouts or breakdowns or breakups. So how do we have a feeling of when there is a change of the trend? So we can see a move on the open interest and you can see, starting to sell those contracts. And then all of a sudden you see a huge decrease on the move. So that's how we use them. Sometimes we use, like traders use it as a support and resistance levels. They find a certain amount of open interest that it doesn't go more, people don't buy it. They don't want to get more exposed to that specific contract. So if that happens, well, you can use it as a guide. Remember, we use open interest and volume and see the price action and we see the different indicators. So this is just like normally
Now you better start practicing the whole thing.
Yep, I'm trying to mute everyone with open mics. And if in any case, guys, we see that you need to have 3 indicators normally. Yeah, like that's the easiest way that I can put it. Like we try to have the price action, we have to try the open interest and the volume, and we try to see the levels. That's how I trade. Everyone in OOT will have a different style and you will hear it here. So what else do we know about increasing open interest? That suggests that a new position it's been created, indicating a growing interest or a conviction in a particular option contract. This is for a particular price. If we want to jump into Apple's 180s, we will see how the open interest for that specific contract will work. Okay, so the main difference for everyone to learn is volume is the total number of option contracts bought and sold in a single day, and open interest is the number of open positions. That means outstanding contracts for an option. These positions on the open interest side are not yet expired, are not yet exercised, and or not yet closed. Because sometimes when we close a positions, that offsets the new buys, okay? So that's how we use them. I'm gonna give you a quick example. Let's imagine. Let's see who else I got open here. Remember, guys, everyone is on mute. If you're gonna be on the car or doing anything, please mute yourselves. And if you have any questions, just go ahead. For a quick example here, let's say that, we're considering to buy a call option for company X. That company is expected to release earnings and I found this example and I wanted to make it this way because we are entering earnings season, so it's great. X company is gonna report next week, and the stock it's been trending upwards. So you believe that there is a potential for a significant price increase after that earnings announcement. All right. So how do we know, or what's the step that we should follow to enter on a trade? First, a little research, you got to know what you're doing before entering the trade. What do you know about the company X? What do you know about the performance? Do you know that if they have anything coming up? Do they have you seen any of the analyst forecasts? You can see the analyst forecast on TOS. You can go to Webull. You can go to Yahoo. You don't need to pay anything. There's so much free analyst forecasts that can guide you on a longer term if you want to invest into any of those. Then the open interest analyst, like, did you check how that call option for company X, if you notice a significant increase in an open interest for an out of the money call option? Like, out of the money contracts are very far away on the chain of options, and it may suggest that traders are betting on a specific potential price increase. So sometimes you'll see that people will buy SoFi January 2025, 25. It will be the price for those contracts on calls. It's like, why it's so many volume and so much open interest on a 25 call option for SoFi for January? I mean, that's a leap. So that's a guide that big money is moving that way, and that's where we want to go. So then volume analysis, same thing. We can see how the recent days leading up to the earnings announcement, you can see the volume moving up or down. We could indicate that growing investor interest and anticipation for a positive earning. So you can be watching a specific name and just be watching the volume and see what's happening. Like, is it growing? Is it is it decreasing? What's happening with that before you get into any certain name? Now we look for confirmation. Ideally, we want to see the high open interest, a high volume, and a specific on those strikes near or slightly above the current stock price. That's what we want to see, because we want to see interest. We want to see money moving into that price. So this is a confirmation of the market optimism, and it will give me more confidence of what I'm doing. How are we going to execute this? Well, based on our analysis, if you find a combination of a high open interest and volume, X call option that you like about this company, and you decide to buy it before the earnings announcement, well, you can anticipate a price increase. But however, if open interest and volume are low or conflicting, you may reconsider and wait for clearer signals. So this is how open interest and volume can help you decide what will you do prior to the earnings, or even if you just want to invest for a day trade. Like, I choose my contracts based on volume and open interest, even if I only day trade, because I want to have the most liquid contracts that I can get. How do we monitor our trade? Which is, sometimes us as retail traders, we make a big mistake. We buy one, we forget about it, and then we try to jump in other names because Flips is making tons of money in SPX, and Nando is making money with Palantir, and we just want to have 5-7 trades at the same time. We need to monitor, we need to manage our trades. So after entering it, we have to keep monitoring the open interest. We have to still see the volume for that specific contract that we get in, and that's gonna give us a indication of how our contract is gonna do. How, like, are we well positioned? Can we add? Or we want to do something different? So it's really important that you keep a eye on your contracts, and you can keep watching not only the price, because of course you're gonna see what the price is doing on the chart, but if you go to the volume and the open interest, it's gonna give you a additional indicator of if you're in the right spot, or you should, be careful. It's lowering down. It's getting out of that contract. Just, hey, you know what? I don't want to be the last one. Let me get out of here. So kind of it's that using open interest and volume in this imaginary trade, you can make more informed decision. That's what we try to do, and potentially increase your chances of success to, make profits and be green for the day. That's what it's gonna do for our text. Guys, remember that you're on mute. Everyone is on mute, please. If you're gonna be not having any, or you're doing noise or doing anything, just be careful and be aware, please. Thank you. So now I'm gonna change the screen, and let's go to the actual trades and see some money. There we go. Share. There you go. Now, guys, we are on my main screen. Let's see. I don't see where the chat went. Here we go. Still have my chat open. I don't see anything here. So any questions so far here, guys? Microphones are open. Any questions for the definitions? Everyone good?
I have a
Right.
question. You may be about to speak on it, but is there a way we can like set an alert to be like, okay, let me know if this contract hits 10,000 in volume or something? Is there?
Not that I'm aware. As I said,
Okay.
not that I'm aware that there's no on the like here. We're gonna jump into, let's see, are you gonna let me? Really? Let's try to do this. There you go. So if you go to trade, I'm not aware that you can, there is a way to choose like how to put your open interest and alarm or anything like that. But I just wanted to let you know that here for the people who uses TOS, here's when you can change the layout of information of what is gonna show you on your options chain. Like as you can see, if you open this little menu, you can customize it, you can save it, you can add it, you can mix it, you can do everything. One of the preset, it's volume and open interest. That's one that I like to use, that's my main one. And dependent of if that's what I use for day trading. If I'm trying to buy leaps, if I'm trying to go for a swing, I will change maybe for my Greeks. And then I might go to my implied volatility and probability and my delta if I'm trying to go for swings. But if I'm just doing day trades, I just go here and you can see volume, open interest, the bid, the ask, and same thing for the puts. Super easy. There's not much that you need to do there. And I'm just gonna find you samples now. Like we had the chart, and this is, you see the moves that we had. I'm gonna use Apple as an example. At Apple today, we were trading Apple on the way up. And here in our main chart, you can see how Apple went on the way up, and then suddenly we see the volume and we see the TTM squeeze just moving down, down, down. And then at the end of the day, always kind of a little squeeze. But if you go to the contracts, which contract? Let's say like this is not moving now because we're here, but let's say that look at the money contracts. Look at the open interest, 40,000 and 91,000 in volume. So as you can easily see on your options chain, these guys here, look at all these guys with 5 figures until here, are super liquid now for this week. So any of this is going to give you a great advantage if you want to get in and out pretty fast. We can monitor, like, is this going to keep growing? Is this not going to keep growing? And then we can do the same on this side. Look, I don't know. Someone has an alarm going on. Yeah, remember guys, you have the microphones are not muted. So one of the reasons that how do I select a contract if I'm day trading like today? I will jump into my option chain and look. I try to see which ones are the ones with the most the higher open interest and volume, because I know that they're going to be the most liquid ones. And then I'll try to see if that adapts to the price that I see. But how do I do that? Well, I try not to jump, like completely blind. What I'll do is I know that I had a level here in Apple, and I have another level here in Apple. So if I'm watching, we traded this way up here, and I knew that I have the 50 daily SMA as a resistance. And as a matter of fact, the 50 daily SMA, as I discussed in my previous lectures, it's a huge resistance. And what happened? We tried to win that way. Nope. And we went down. So we sold around this area. We got another sort of rejection here. And then here, I see like, I show like 1, 2, 3 rejections out of that spot. And all of a sudden, I knew that I wanted to go down and grab some puts. So which puts do you jump in? I'm not going to go here because these are, I'll try to see on my chart. Well, my previous points are 173 and 172. Normally, I will try to see if I can go into the 173s, 172s, somewhere around this area, because I know for sure that those are levels that I have drawn. If it's too expensive, I might I can try to search for an alternative. My alternative is going to be the second or third option with the highest volume and open interest. So this is the furthest that I will go on buying those puts. If I'm in right now, remember that this is not moving the way it should, and the way it should be moving on when we're live. But this is going to be moving all the time. And this is, if this is going down, I just want to get into those that are the volume is increasing, because if this is too expensive for my port, I'm not going to get into this. Normally what I like to do, if your port can handle the size, I will go to the second most of the time. I jump into the second one, and if I have like if we were to be here and I see that all these movies happening, I have a certainty that we might, I mean, it's not, we don't know that in fact it's going to happen, but I have more certainty that we're going to keep going down, and that contract that it's just, the 170 is going to get in the money. And once it's in the money, the variation and volatility of the contract is much less. People tend not to buy. Like, you can buy any of these contracts right here and just be safely and don't move, but people don't want to spend as much money. They want to try to get the bigger move. And that's why, an alternative, by not only watching the price and watching the chart, you can see which one has the best open interest, highest volume, more liquidity. I will jump into those, because some people will buy, let's go to NVIDIA, which is a better sample. People will say, you know what, I want to get into the train. I'm going to buy the 15 contracts, the 695 puts, because they have 1,000. These guys here are very risky. This is $15, but this is $15 that people may just want to, lose. They don't care. I buy 3, 4, 5. Like, this is really, really far away. It can hit if we have a huge move. So what else do we have here? 1,000 on volume, 4,000. Well, that's a little more, interesting. But look at all the way here. Why these contracts out of, instead of being close to these ones, the 800s have 20,000 volume and 14,000 open interest. If I will get contracts for later on this week on the put side on NVIDIA, this one will be the ones that I will be appealing for me. If I don't have the money to jump into, you know, this, look at how 27,000, the 850s and 16,000 are the ones that make the most sense. And they are one spot away from being at the money. But I have my risks here. You have to follow that your volume and that your open interest are going to keep, you know, growing, and it's going to keep increasing, because I want to see more interest going into these contracts. If all of a sudden, as we spoke on the definition, we see that my open interest starts fading away, and I know that now, I know out of my eye, like the corner of my eye, that I'm in 14,000, and all of a sudden I see 12, I see 10, I see everything going, I'm going to get out of there. I'm not gonna, even if I'm profit or not, I'll get out of here, because it's not working and people is getting, you know, it's leaving this contract for some reason. So another way how you can use it for longer trades, which is one that I like a lot of people will be scared, and people don't like to trade, you know, same days and or weeklies. So if we are in SPY, for example,
I got a
and
question.
and we have no clue that you know, we're today at the end of the day, and you are, for some reason, you have your gut feeling telling you we are gonna go back to 515, but we have no clue on how long it's gonna take us to go back to 515. So what can I see on my contracts? I got all my chain of which day would I want to take? Well, let's say I'm gonna try to reach this here, and I'm just gonna browse. Where do I see an open interest and a volume that, you know, just it gets my attention? Nothing on April 25. Let me jump to the April 30th. Oh, look at this. Now I have a 530 that it has 10,000 open interest with a 4,000, you know, volume. This is appealing. Like 530. Where do I was thinking that it should? I'm looking for 515. But if I go on the dailies, my theta it's gonna consume my contract pretty fast. So if I want to take part,
I need price as well.
guys, remember that you have your microphones are unmuted, please. So if I don't want to, you know, I don't want to take the risk of having a same day or maybe weeklies on SPY, I might be able to grab at the end of April, the 30th of April, and jump into a 520 or jump into a 530, and my contract is not gonna degrade as fast as a daily or as a weekly. And if in fact the movement to go back to that price happens, I'm gonna take profit of it. It's not gonna be as fast as this one. It's not gonna be as aggressive as this one, but I'm gonna be safely, you know, making money out of being super out of the money with a higher chance of not getting, you know, my contracts voided or not getting executed or not getting completely faded away by theta. So sometimes we do that. Like if I want to take part of SoFi, I'm in SoFi for January 25th. Why? I like these contracts that they have little implied volatility. They have some. They have open interest. They don't have as much volume, but I'm expecting that that's going to increase. So I'm setting that I can add. I have a lot of time to add, to change my position, to see if I still like it or not since I got it. So, but you can maybe, let's see what other names are we moving. Let's say Tesla. Everyone wants Tesla.
Empanada.
Yes, sir.
Would you look at the put side, like on this SoFi example, to validate your thesis? Like if the put side is very low, then maybe I'm right.
Look at, like it depends. Like let me see on the January. Look at we have on the put size. Look at the volume and the open interest. Nothing. And look at the volume and the open interest on the, for a leap. You see how out of just watching this, I can say, well, maybe people is expecting to go, that this thing is gonna go a little higher at least until the end of the year. And let's go to August. August, we have 17,000, 13,000, not as much volume, but we got tons. These are open. Remember, what do we say that we have on open interest? Our open contracts, our active contracts. Those are contracts that are in some traders' hands right now, but they're not been adding anything new on this day. But these are contracts that are open. That's a lot of contracts on here. Look at the contracts and puts. Nothing compared with this, right? So I like visually so far, I like that. I like to use it. Look, again, look at all these open interest. Remember, open interest means contracts that are open at the moment. And today, tomorrow is going to be zero again on the volume. Somebody bought 300 contracts of this. Somebody people bought 143. Someone added 200. And all of this is adding up to each volume every day. And all of this is adding more interest into SoFi for all of these prices for later on September. So
Hello.
Look at the put side. Nothing on this side. So my guess, if we see the option chain, is I see that it's betting that this thing is going to go up. Yes. Who's talking there?
Thank you. That was clear.
You see how great it looks here? And what I like about using volume and open interest is just that it's pretty fast on the eye to catch it. So I'm right away, if I'm trade like intraday trading and I want to jump into one and I see damn it, let me jump here, I grab here, jump into the 10th of May. What do I got here? No, I don't like 10th of May. Let's see. June. Okay, look at this. Look, June, 36,000 and 1,000 here, 36,000 contracts open. People like this contract a lot, the 10. Okay, boom, I can jump here. And you can do that while trading live. You will see how those open interest and the volume is going to be moving. But that's what I want to show with this lecture is this is one way how I use to choose the contracts, because everyone loves to trade, the candles, the trends. Where do we rake up? Where do we rake? But how do you choose which contracts are you getting? Like it's we can decide that all the time we just take the ones that I can afford or the ones at the money. But this is going to give you another choice on when to decide which contracts are you getting in. So it's going to depend on the time frame of where you want to get it in. Like if we're trading Walmart, which is slower, traded, you see how the volume on this is just never goes to like 3 units or anything like that. But then we have thousands of people holding these contracts for a longer time. Let's go to the 3 of May. You see, open interest is small because people grab those contracts and hold them and hold them and hold them. Walmart is not a huge, fast, paying company, but people like to hold those for the return. So let's see what we got on. Look at how interesting here. We do have nothing in volume today. No one expected or went into anything for June 25th to June 25. Let's say September. Nothing, like just a little on the 56 for Walmart puts, but then we still have a lot of interest on contracts open on the call side. So I think this will give you a better choice of contracts for the next time. Like tomorrow, if you want to see how contracts move, how contracts are how they move, you're gonna be able just to watch the open interest and the volume, and it's gonna help you to choose even for intraday trading, like, for day trading. We are trading, let's say, AMD today. Which one are you gonna choose for AMD? Guys, remember, microphones open, guys. Guys, microphones open. Please mute yourselves. Somebody's cooking Mexican there. All right, if not, please use the chat. Might be anything that you need. I don't know if anything on the chat, but everyone's muted. Ready. Everyone's muted. Sorry, guys, easy this way. So if you have any questions, please let me know in the chat. That's gonna be a lot easier. I just wanted to show, like, this is, for example, AMD. If I'm trading tomorrow AMD, look at the choices that I have of contracts. It's gonna depend, of course, until the prices meet my port, but I will choose my contract based a little on the volume. Look at this. I like this. Depending on what the price is gonna do and where we're gonna go with the price, I'm curious why there's so much interest on this 190. That means that people it's trying to buy, like, remember all the thing you can have a cumulative IV, meaning that if you buy 40 contracts of this, you're gonna make a lot more money than if you buy just one of this. So this is interesting why this contract, has so much of an interest. Maybe there were people that were holding it from, before, but we know that the volume resets daily. So this ton of people bought this contract today, and this should reset tomorrow. So I'm going to keep an eye on this contract on the 190 for AMD tomorrow and the day after. Just want to see what happened. And then, not to be too far out of the money, I will look for probably the 170. 170s will be the ones that I will play based on this price. Yeah, Scotty, sorry for that. I just wanted to have everyone open mics. That will be a little easier on people to ask the questions and tag along, but I will open the microphones at the end of the session when we have 10 minutes, and we will do a Q&A. So if you want to see any other samples, like let me see which one is a very, very, like, I think I was watching Nokia today, which is, I think, MKO. What is it? I saw it today. Oh, NKI. NKI, no? Was it? There's one name that it was really, really, really. Oh, Deckers. Deckers are look how Deckers don't have much move. Prices are really high. And Deckers is the owners of Hoka, the shoes that are like, like kind of like replace the New Balance for all the elderly people and the people that wanted to walk and everything. So Hoka, that it was conceived as a triathlon shoe. Now it's the new sort of New Balance shoe for everyone. So Deckers is the owner of that brand, and they've been huge. Like their charts are really good after the sales and then their acquisition of that thing. It's been hugely up, and then we have a little retrace. So let's say that this is a good example. Let's say that we are right here. Like we got this moment. We know that this is a gap. I'm just charting here 1 second, and I'm looking to go back to 848. But I don't know how long it's gonna take. So you know what? I can just go to Deckers. I'm gonna take for an August. I know 848 is the price that I'm looking for, but this is too expensive. I might grab maybe this 157 open interest. That means that there are 157 contracts open at this price, and can jump in this. And this will be easier for me to trade than any of this that they have 0 interest. And if I want to get rid of me, I will have to see someone willing to get it. So it's kind of, complicated. AI. boom, let's analyze only with open interest and volume what AI wants to do. So I can open my, let's say May, which is not that far away. Not a lot of in volume, not a lot of people bought today puts. There's more people who bought some calls. I don't see huge movement for May. Let's go closer. Look, this is interesting. Tons of people, it's holding this contract right here. That means that probably people from, they bought it before they gap down, and then they're holding this contract for some reason. They thought that, AI was going to perform better, and they're looking for the 40. How do we see it? Look at that. Look where the 40 is. Those contracts are dead for those guys, completely dead. Nothing there. Unless they roll them over and try to see if we're gonna go higher. But that contract, I don't want to jump into that, or unless there's some news or something happening in AI that is gonna change the trend. But so far here, look at that break, nothing. I will not get involved in that. Even though it has, but there's no volume of people getting into those. So you gotta use it as a way to indicate which contracts you want to get, how to get them fast, and then of course you will add your certainty with other indicators. This is my longer term indicators as usual, and I will see my break on the trend. So this guy is very far away from all of our daily SMAs and here. So this is, I don't know. I will not get involved on this unless I see a bounce or I see something coming back right now on AI. Let's see what happened to AI. Nothing. Look at that. Up, down. Nothing to look here so far. In the longer, we broke this trend down, and I will not touch it up unless we break this trend again upwards. Let's put it yellow here, and that's how can I guide myself if I see this line crossing somewhere in my phone. So guys, that's the information that I have on open interest and contracts. I'm gonna open the microphones for everyone. I would like to see what you have on questions, and let me know.
Empanada, this is Gail. Question for you. Is it
Hello, Gail.
better, what I'm looking at with these indicators, it's better to look at the volume and open interest over the candlesticks? Is that true? So are the better indicators? No, okay.
No, remember, you have to have, price action is gonna be your paramount. Price
Okay.
action is your candles. Your candles are gonna guide you. But what you can help yourself with is when I see a move like this, and I see that this is holding on SPY today, on this side here, I will be like, for example, when we were somewhere around here, holding, if we were on the chain of options, and then we'll see that the volume, and let's say that we were here, and before that happened, we were watching this, and all of a sudden this started to go up like crazy. That's an indication that we are coming down. And remember that we don't know what's going to happen. We have no clue. We're trying to predict, but these two numbers going up, my candles coming down, and my levels being broken, that's going to give me 3 different signs that we're going down. And look at how cool this today was, what happened in SPY today. I have from yesterday my trend line. I wanted to see if we were going to break this or not. What happened? We went up beautifully, went down. Some people said, no, this is the bounce on the trend. Let's grab calls. They never had a fully like hold it completely on that trend. We had a look above, went down, retested it. And this, for me, was the perfect point to get puts. Because we
Gotcha.
broke it, we could never get it, And then, but if you were not really sure, when I saw this, I can just change here and just watch. If these things start going crazy in volume and the numbers start, increasing on, remember that the volume, it's the number that were bought today. And open interest are the number of open contracts that they are, that's the open interest. Like these are contracts that were open and closed today that it can be. And these are contracts that are the ones that are remained open today. So there's a lot of contracts still on the downside on the 502s. And all of these were movements that happened today. So that's really interesting. But
Gotcha.
it's just a help. You cannot use, there's no one only way to decide or to guide yourself on which way you're gonna take the trade. The idea is that you will find the ones that are you're gonna feel more comfortable. I don't like, I change my chain in different times if I want to see my implied volatility and here, and I will see my implied volatility as I change my delta, and using IV and delta, I will choose for longer trades. And depending on, we always want to buy a lot above 0.33 or certain delta. That's up to what your plan of trading is. That's another sort of way to trade. I see a raised hand. Who's raising your hand? Where is it? I lost you. You can talk. Everyone is unmuted, so. So is your question answered, Gail?
Yes, thank you. Yeah, it is answered. And if no one else is asking, I have one other question. Is it true that volume should be somewhere in the thousands, but open interest in the tens of thousands? Or is that just a rule that's out there for beginners?
No, not the volume. No, I don't, doesn't need, it depends on the name that you're going to be trading and the interest that, investors have on that specific name. Like, doesn't have to be, it depends on what you want to do. If I want to scalp, I want to go for the ones that have, more volume and more open interest so I can get rid of them faster. So if
Gotcha.
we are in puts here, I'm not going to jump into the 489s. Because first of all, it's gonna be really hard that I go. I mean, it happens. Like we have seen so many times with these moves that people buy like a $7 and it goes to 1,000. But that's not, that's not what happens on the trade, on the everyday trade. Normally, you will get any of these 4 probably contracts out of the money, at the money, and from here on, you're risking that the move is gonna go against you a little more. But if we have remember that if we were here, the volume and the open interest already went higher. And when this happened, they went a little lower or they kept going higher. And then we have all of this because they accumulated and we see like people taking gains. That's why the open interest went a little lower, but the volume here probably increased. And then the open interest increased. You can remember the open interest of the people who bought the contracts here, and they took, probably people took their profits here. Somebody scalped this like crazy, and then the volume again jumped up, and then the open interest opened up again. Because people, once the volume goes up, that means that more people were jumping into those contracts there. Therefore, the open interest increased again. Because
Got
they
you. Thank
closed
you so much.
they closed them on that little retest. But
Yeah.
it's more complicated. I mean, it's really easy just to watch it. I mean, I just want people to understand what's happening while watching that number. So
Okay,
when you
thank
see the
you.
number, you don't see that the number is going up or down because that's really easy to of course to watch. You don't need to know all of this. You can just see like, let's see which one has the biggest number, 502s. That's it. I'm going in. But what's the idea? Well, before choosing the 502, I wanted to see where are my levels. Like if we were around this area, I want to try to see if I can jump into a 509, if I can, maybe a 506 because I had that level, or 504. And then if that makes sense when you jump into your option chain, you will see like the 508, nah, I can afford it. The 50, you know what? From the ones for my levels, it's gonna be around this area. These are the ones that I can take. And something to remember too. That doesn't mean that if you don't have the port to buy it, is that you should buy anything here. If you don't have to port to buy the correct contract, that simply you have to change the name of the stock that you're trading because it's too expensive for you.
Got it. Thank you so much.
Yeah. Any other question, people? Any other doubt on contracts?
On open interest, when you're
Yes.
an active trader, is that the volume column that's in the front where you see it changing all the time?
This one here?
I think so. It's hard to see. I'm on my phone.
Oh, sorry. This volume is gonna be for the specific price and the specifics. Let's match it here. This is what contract are we in right now here? The problem that I have right now is I'm not in a specific contract because I'm gonna watch it here on my chart. I'm gonna watch it on my flexible grid.
Gravy is just cornstarch, all right?
Yeah, it's gonna go to, let's say, 510.46.
It's crazy.
Let's put it here. It's gonna go to my orange.
Yeah, but
Seven
there's no
chart.
nutritionalists that
And we'll see
don't
that
follow the American Diabetic Association. They have to.
ask. Yeah, this is gonna give you the,
What's that?
yeah, this is gonna be with this with the
No,
volume.
good. Just
With-
maybe the earbuds is the microphone. That's
You
better.
got your microphone
right?
on, yeah. So you're gonna see that the volume changes depending on the price here of the specific, and this is a guide too. Like you could see on the active trader all the volume that you're gonna have depending on the price of that contract. So it could be a guide, and then that's why we move around these areas normally.
Right.
But I don't use it in here. I just go to my contract. Sometimes I don't have, when I'm in a position, my other screen, it's I have this open. Let me show you. I'm gonna stop sharing this one and I'm gonna share. This is what I got as my active trader. So this is my second screen. These are normally the positions that I'll be trading. So I was watching, we're in the Morgan Stanley today. I have my Morgan Stanley here with my contracts here, depending on the sizes that I'm in. And I will have the prices of the contracts open on my option chain on the chart on the screen that I just moved from. I will have my chain of options, and I will have my eyes, nailed to the prices. And I want to see how the prices are moving, how the chart is moving, and where am I between the levels and my open interest and my volume. So that's how I do it. I jump from my positions once I'm in to the chain of option prices, and I will go into the certain, let's see, I'm gonna stop sharing this one again, and then jump into this, and jump into this one again. So I will jump from the specific price where I'm in to my chart. And I'll be back up and down and see, because my normal chart, I'll watch it like this. This is my chart. This is what I watch. I watch the 2 minutes. So I try to see very in detail where my chart is, where my candles are moving. I got my level 2s here. And I have on my left side just a glimpse of locate myself or where we are in comparison to where I'm here. Because when I'm watching these candles here going in here, I have no clue where I'm compared with the price action. So I like to have this. And once I jump into the position I'm in, and I'm in, I'll set up my stop loss somewhere around this area. And then I can just go to my flexible grid, go in, set up the stop loss here or here. I will buy calls or puts here, depending if I'm trying to scalp SPY pretty fast. So I will buy calls and puts on this, and I can just jump in and out any of those positions and set up my stop losses, and I will move them manually. I don't have a trail stop. I just move them manually depending of my levels and see how much space do I like to see. But if we jump back to the volume, I can move that depending also. If I see more volume coming in, I will give them more room. If I see the volume fading, I will try to tight my stop loss, because I see if it's fading, the thing is gonna start coming down. So I want to see as close as the price action is to kick me out and be safe. So that's how I use it while I'm trading. So I have my right screen always gonna be those 4 screens. I'll switch the name between the futures, NQ, ES, and the positions that I'm in. And this one is the one where I do my analysis. I will go deep here, see where we are, where I want to get. Look at this, for example. Like I knew today, I was watching to see if we were going to break this little trend here on the 2 minutes. I wanted to see, and then what happened? We kind of rejected, then we broke it, but nothing happened. We kept just trading sideways. So not much action, nothing to jump in there. I will be doing those little things during my trade. Any other question, guys? How do you find useful the information on the open interest and the volume, or that's something that you have never used or you don't care to use?
Yes, really good.
You like it?
Yeah.
All right. I don't know, and sorry about that. I don't know how that works into the different Webull and Robinhood platforms, but since
Robinhood doesn't have it.
they don't have volume and open interest, I don't know about that. I will have to ask. I think Toasty is the one who uses Webull most of the time.
Robinhood doesn't have it.
Okay. Well, that's one of the reasons why, it's really interesting that we find out to use Thinkorswim as a very complete option, because you can customize that. That's the other thing. Remember, here I can jump into here, and I can customize it and save this one and then add to an open interest if I want any of the Greeks. If I want to, I can add the IV. But listen, I make it simple to myself, and I only use the open interest on the volume, and it's faster, and it has worked for me that way. I don't get too complicated. I don't buy like iron condors and I'll do different things. I do, straddles, strangles. I will do long puts. I will hedge my positions, and I will try to, with my gains, try to buy more of my long-term positions. That's it. That's my complex investment.
And in level 2s, Empanada, do you look for the volume too?
On level 2, what's up, Pepito? On level 2, what I look is for the contracts. I will have eyes open on what's happening here, what contracts are opening, what's the amount of contracts that are being bought. And remember, this is, you have to add like a couple of zeros to this. This is just a reference on the different sort of money makers. How many contracts are people getting and they're getting bought or asked? And these are thousands. So I just have them move them here, and I'll see if there's a specific price that something's happening. I would like to reach that. Like if you see a specific price, like, we're testing between 504.50, something's happening there, you can jump into the option chain and see what's happening within those prices, like 540, or what's happening between 46, 47. You can just jump and see why why do I see those 504s being tagged on the price? Let me go back. 504, where are they? Oh, they're at the money. That's why, you know, people is getting in them, getting out of them. They're just, you know, scalp them because we're here. Because remember, most of the people think that you cannot buy. You can buy any of these contracts if you want and just leave them there for a longer time. They will have just less volatility. But normally, as a common practice, we will get 3 or 4 at the money. That's normally where the prices that we get in. But I use it that way. I just use it as a reference of what's happening, and I have my eyes open. If I see huge numbers of, you know, of contracts being bought at certain prices, I know that those prices are being attacked and on the way up or down, and that will let me know if we are getting, sort of help me on the direction that we're gonna get.
Excellent.
Yeah, but try to use open interest and volume tomorrow on your trading and see how you feel, see how you see it. Like when you want to choose a contract, and not for scalping. For scalping, you grab the one at the money and scalp it and scalp 1 or 2. But if you want to do a swing trade, you want to do a day trade, keep an eye on open interest and volume, because that's going to give you the most liquidity, the most interest, where the action is happening. And that's why one of the reasons why I wanted to use it, because we're entering this season right now of earnings that it's really important. People will love to buy lotos. People will love to, you know, jump into anything. And I just find that, you know, knowing that what's the difference between the volume and the open interest, that, you know, knowing a little bit of how can I trade if I have, you know, the volume is higher here or different. And you have to be aware that, you know, the indicators show you what other market participants are doing, how the price it's being affected. They inform you of your trading system. If you're doing, you know, you're watching what is happening, or you are wishing that something else is happening. The indicators also are useful just to make sure that options that you're trading are liquid, are allowing you to easily enter and exit the trade the best of possible. So that's why we use this, and the reason why they're very important. I hope that it was useful. Hope that you learned something new if people never used them before. I really like it as my daily trades. That's how I choose them. And probably the lecture is going to be available for you in the next couple of days if you want to go for the basic context of the session. But for anything else, feel free to DM me. Any questions, any doubts, if you don't find it, if you don't see it on TOS, or do you know how to set it up, just let me know, and I will help you out with that. For some reason, I'm not able to see the chat, so let's see.
Hey, thank you, Empanada.
It's a pleasure.
Thank you,
See-
Empanada. Excellent.
Hey, Pepito, kicking ass.
Hey.
I'm really thankful for everyone sharing this time with you. Hope that you learned something. And if you don't have any more questions, I cannot read the chat, guys. I don't know why, but thank you very much, everyone, and have a great night.
Thank you.
Thank you.
Thank you. Have a good one.